this Americanization model kind of will break football a bit because it's just going to be a product to sell. And it's just going to be all about the money. There's a lot of people who don't actually want to sell. They say they need money, but then they actually don't want to do a deal. So I think for me, I'm good at finding the right seller. If they've got a reason for selling, then they're much more easy to do business with. I do like the MCO space. I do like the idea of bringing players like Luis Diaz from a third-tier club in Colombia all the way to England to the Premiership to win the title. Get it, love it, and that whole story.
Welcome to the Football Economy, the show where we explore the financial forces shaping the global evolution of football. I'm Ibrahim, and today we're diving into the complexities of club ownership, mergers and acquisitions, and football finance, a field that is becoming increasingly competitive, intricate, and very international. To help us navigate this landscape, I'm joined by Alexander Jarvis, founder of Blackbridge Sports LLC. Alexander has a wealth of experience in facilitating high-profile football transactions. He has also played a very pivotal role in advising investors, especially from the US market, on strategic moves involving the global financial investments landscape in terms of football. Welcome to the pod, Alexander.
Hey, good to be here.
Great, welcome. So let's start with sort of like your very interesting background. From what I've seen, you've lived in different cities, so ranging from Beijing to Hong Kong to London, and obviously you split your time between UAE, Europe, and Paraguay. How has this on-ground experience basically sort of informed your understanding of the very diverse football market, but also how has that also shaped your investment lens?
Well, I came into the football business with Chinese investors back in 2014, 2015, and now I mostly work with Americans and Canadians, where I guess now as football has kind of shaped in Europe, I've also shaped as a business around that. Obviously pivoting from China back to Europe to the US from 2018 to 2020, and then obviously with the pandemic, repositioning myself a bit out of the M&A space into the football financing space, and then back into the M&A business. And yeah, we're all subject to market forces, and yeah, I've had to move with the times.
Yeah, it's an interesting point you make about moving with the times. And when we talk about moving with the times, we know that when it comes to football finance, there's been a sort of like a slow evolution of terms of the different formats of financing. And what's sort of like your understanding of how this evolution has taken place?
Well, I mean, how long have you got, right? We could be here forever talking about it. I think for me, the M&A space is obviously doesn't change too much. What changes is the buyers and why they're buying, and obviously who's selling and why are they selling. Football financing business is pretty basic. There's always going to be a football club that needs money, and obviously most of them on paper are insolvent. So pretty much all of them need money at some point, in forms of refinancing or kind of forward doing player receivables, forward kind of financing their income. So yeah, I mean, maybe go into a bit more specific. I can try and reply a little bit more.
So in terms of sort of like how clubs generate revenue and where they lose money, where do you see this sort of like this becoming sort of like a focus in the lower leagues, where investors focused on trying to make sure that they're able to mitigate their risk in terms of where the upside is in terms of revenue, but also where the downside is in terms of like endless pits of expenses?
Well, I think most Americans looking at the English kind of football league right now, or the English football market in general, is obviously they've all loaded into the Premiership. So half the Premiership now is American owned. Maybe more in the future. Obviously, the Championship also a similar situation. You've got a lot of American capital there, but the Championship is, as I like to call it, as a bloodbath. There's a lot of clubs having a lot. Most clubs that kind of have been insolvent for quite a while, and obviously they're just bankrolled by a billionaire or someone who's willing to blow £1 million a month with no end point in sight, right? So you're so close to the El Dorado of European football, the Premier League, but you're also close to, I think, financial Armageddon there. There's a lot of clubs with problems. So I'm finding most of the Americans, especially that I'm dealing with, are focused more on kind of League One, League Two, National League, even National League self, just because it's just a better, in my view, it's a better proposition. I think a lot of Americans are kind of they're either priced out of the Premier League or they just think the Championship is terrible business. One friend who calls it fool's gold, a friend from Alabama. So he kind of, I think a lot of the people, Americans, share the same view that it's just very expensive now to buy a Championship club, and the risk reward profiles, it's just very pro risk. That you could buy a League Two club for far less money and spend 20, 30 million, 40 million pounds, and you've got probably the same amount of chance as a Championship club gets, against the Premiership, but you don't have to burn so much cash every year. It all depends how pro risk you are, and obviously, for an American who's looking to do these deals, a lot of them, they're not so familiar with losing so much capital, like in the US domestic market, in baseball, American football, basketball. There's a lot of kind of it's just that for the Americans, it's just a far better business model. And obviously the losses are just not as extreme. And also the Americans don't understand the promotion of relegation. It's not really a thing in the US domestic market. So I think the Americans are kind of moving from the Premiership to Championship, lower to lower tiers. There'll also be Americans still kind of entering that space, but it's more kind of PE that's leading that, not the individual kind of private shareholders.
Yeah, so PE and potentially family offices, if I'm not mistaken. So I mean, you talked about risk reward and profile, and when it comes to basically taking an outside look at the industry, I would say most football consumers, are well aware of how much agents make in terms of like their active role in facilitating deals for buying clubs and selling clubs. But we don't hear much about financial advisors or brokers in terms of like selling clubs and buying clubs from M&A perspective, from your perspective, from your sort of like field of expertise. What would you say to people who are not aware of like the intricacies of financial advisor, if I should say that as a role? What would you say is the critical need for it? How do you explain it very clearly to, or very simply to, a very layman in that sense?
Well, I mean, there's plenty of fans who will have an opinion on people connected with football. Obviously, I'm not a football agent. Football agents can make 5 or 10%. They represent a player. They also make a fee out of their wages, and obviously they have aligned interests with the player and sometimes the clubs to obviously to pump up the valuation and then to obviously sell. But also, football agents can and do regularly destabilize clubs. They kind of sometimes they'll pressurize the player. I've seen situations where the player's been told to be sick because of no negotiation. There's a lot of stuff that goes on. So obviously, my line of business, I'm not a football agent. I have no kind of alternative motives when I'm doing deals. For me, I'm just focused on pretty much aligning my interests with the seller or buyer to get the best deal for that specific kind of person. So if it's a buyer, then obviously I want to get the price lower. And then if I'm representing the seller, the club owner, then obviously I want to get the best price. But I would say, someone like me, on the kind of like very small boutique kind of business advising buying and selling football clubs, it's very different than the agency business. So but obviously there's different levels. So obviously Rain Group, Rothschild, some of these big guys, they get the huge mandates, they get the top 20 club deals, and they also get to go public with it, right? So when Rain Group got the mandate to sell Chelsea, they were able to do a press release, and then pretty much billionaires fall the queue to look at that deal. Unfortunately, I don't get those opportunities to kind of to position yourself in that kind of way. I think it's more kind of they have to be an investment bank to also be positioned like that. But for me, a lot of my competitors, these guys, we don't get to publicly announce that we are acting for a club or kind of acting for a buyer. I see a lot of it is done in the shadows, where we're not supposed to be public in a lot of these things. So I think that's the issue, right? So a lot of people don't hear about people like me who are in the business because I can't give you a running commentary on 15 deals that I've got live right now because there's so many NDAs, and obviously there's a lot of fans who would be very interested in kind of knowing what's going to happen with the club, right? Along with journalists and the other stuff. Yeah, I mean, it's a pretty unique business. Think of it as like selling a very, very specific niche asset class. So obviously there's like real estate brokers who kind of sell $50 million houses, in the US and other places in the world. Think of me very much in a similar way. You're selling a really kind of boutique, very niche kind of business with a lot of scarcity and a lot of people interested in that space, right? There's only going to be so many clubs in England, and there's only so many you can buy. And obviously, there's just a lot of speculation around all these kind of deals. So yeah, it's mostly done in the shadows.
Yeah, I mean, there's a similar sort of like niche industry or very, very niche industry that is similar to what you do as a financier would be basically finding buyers for an art painting, like a very rare piece. And they basically the same role. Essentially, you're dealing with very wealthy individuals who have like a valuation that is based off nothing that's grounded on actual, fundamentals, just based off human
Yeah.
nature in that sense.
Well, you can't use EBITDA to
Sure,
sell a Van Gogh painting, right? So
sure,
yeah, it's similar in a lot of ways. But I
sure.
think it's a more niche market because obviously art will appeal to a lot more people, and obviously there is probably a lot more people who can see a certain value in art. Football clubs, when you buy let's say you buy a 20 million 1 in 7 art, and you put it in your house or you put it in your museum, that is costing you too much money. Where owning a football club can sometimes be hemorrhaging cash. Like I referred to the championship before. There's several clubs there that are losing £1 million a month and have been for 3, maybe 4 years. So a painting isn't going to cost you that much. The security and other stuff for the painting and to make sure everything's correctly, the deeds and everything else will cost a certain amount of money every year. But football clubs can be pretty expensive to operate.
Yeah, it makes you question the rationale, not just the rationale, sort of the psychology of the prospective buyers that you work with, because like you said, it's almost called a fool's game in that sense when it comes to buying a club that's low in the league, but just in general, obviously it's driven by valency, but at the same time, coming from businesses where they have to focus on not just EBITDA but also making sure they are profitable. It's a very, very what do you call it? A very confusing landscape. Seeing people go from
It's just very
irrational.
niche. So most of my clients will be 50 years old plus. Most of them have multiple houses. Most of them have had a jet or have a jet. Some of them have helicopters. Most of them are on the second or third wife. Kind of like there's a lot of, obviously we're kind of talking broadly, but there's a certain profile of an individual. And obviously, a lot of these people, I wouldn't say they're all new money, but most of them are new money. They've made their wealth in the last 30 years. And once they've brought all these things, they've got the watch, they've got the yacht, they've got the houses, they've got maybe a jet, and then they kind of, they maybe they're from that area, or they kind of just get a bit of FOMO. They can see everything what's happening in the football business. Wrexham is continuing to make headlines and to continue to kind of get everyone excited on the media front, selling the story, right? So a lot of Americans see that, and obviously a lot of Americans, let's say you're worth $50 million in America, and you're in Kansas or you're in Indiana or something like that, a lot of those guys, they can't buy an MLS club. It's a $500 million valuation. Entry fee just with the franchise. And then the USL clubs are a little bit similar to the championship. There's a lot of losses, a little bit messy, but at least with a championship club, you are inheriting a 100-year-old company. You've got 3 or 4 generations of fans, and you've already got the building blocks, right? With the USL, most of these clubs are pretty much established over the last 20 years, and some of them just a year, right? So I think a lot of those Americans, in the North American market, they just look at Europe, especially England, as just cheap compared to what they're going to get in the US. And obviously, if the multiple, like the revenue multiples in the MLS are 8 times plus, and you can get a Premiership club for, let's say, 2 to 5 times revenue, then it's an interesting proposition, right? And in obviously lower tier, you can get clubs at like 1 or 2 times revenue, which just doesn't really happen in the US. I mean, I think that's why there's still a lot of buying pressure from the US and obviously Canada, to kind of enter the space because it's relatively cheap compared to the US domestic market.
Yeah, well said. It's like a rat race, like you said. So just break it down for us. The difference between a U.S. investor, a sovereign fund, and a private equity. How do their motivations differ? Like from your perspective.
Well, I don't really get access to the sovereign wealth funds. I mean, I've spoken to plenty of them on calls, but obviously, when you're dealing with that level of institutional money, they usually go for kind of the more regulated advisory company that kind of will do 1 or 2 deals a year, but they'll do the big ones like $1 billion kind of size club. So for me, the sovereign wealth funds are a little bit out of my. They're just I'm not the right person for that. I'm dyslexic, I'm a lateral thinker, and I don't want to be in-house. I don't want to be in the advisory team within a bigger company, and I don't want to work for a company. For me, I should avoid the stock wealth companies in general. Big PE, I say big PE, kind of more referring to the US. Again, those guys are focused on 5, 6, 700 million pound deal sizes. So again, it's much harder for me to position myself on that, because to get a buy side fee or to get a sell side fee, it's just a lot more difficult in the Premiership and Championship to get those kind of deals now. And also the valuations are a little bit off. So I think there's going to be less deal activity around that. And again, the investment banks, the lawyers, the likes of KPMG and Deloitte, those guys are more kind of in that space. For me, my target client and the people I deal with mostly, it's just private investors. They may be worth £10 million, they may be worth £2 billion, but they're looking to do smaller deals. And I say smaller, like £50 million, kind of lower than that. So for me, that's my target audience. And they're all a little bit different, right? I try and avoid the institutional type guys in the space, just because it can take a year to get a deal done. Obviously, there's a big chance you're going to lose a deal, right? If you work on it for a year, especially if you're not exclusive and you're representing a buyer. There's just a lot of risk with that. Where for me, I've done 11 deals in Europe. Most of them were sell-side positions, so I could handle the process easier. So I don't like bring investors. I kind of handle the process from the seller side. So I have mutual aligned interest with that guy. And it's usually a guy, and that guy is obviously, I can run the process. If there's 3 or 4 buyers, it's just easier for me to kind of do it from that way. But they're all very different. It's like everyone in this business, right? Everyone very unique, and one person wants to buy a Premier League club, it's going to be a very different guy than someone who wants to buy a League Two club. And also, there's big egos in this business. There are some investors who have an ego the size of the Burj Khalifa, but there's also some people who are super humble, who you wouldn't know is worth $500 million because of how they dress. I mean, it's a pretty unique business.
Yeah. This is something that I can say resonates with me. So in terms of you mentioned risk and mentioned the time it takes to get deals done, you focus on the seller side. So what are the sort of the critical cultural misunderstandings that you've sort of observed when it comes to dealing with maybe not just US investors but international investors? Because I'm aware you've dealt with Chinese investors also. In terms of bridging the gap between those international investors, with bridging the gap between international investors and the local communities, so that there's no misunderstanding in terms of what the motivations are, what each side should expect from both sides, and how you make sure that the deal goes through without any sort of chaos that comes by, or media bashing at the investors.
Well, I mean, the media have good cause to bash some investors, and obviously they don't make it easy on themselves. So some of these guys coming in. I'll start with the Chinese. So the Chinese, they brought, I think it was 34, 35 football clubs in 2014 to 2018. Obviously, most of them are out of the business, and some of them were very close to bankrupting some huge clubs. Aston Villa, Inter Milan, AC Milan, or even West Brom I could put on that list, and a few other kind of smaller clubs in Europe. So obviously the Chinese would always want something that, so for instance, they would want something that's not losing money, that kind of wets its face, as you will, but they would always kind of buy something that kind of isn't what they said that they were gonna they're gonna buy. Sometimes there was also a lot of focus on the Chinese to close deals. And obviously, there was a lot of Chinese state banks who kind of financed a lot of these deals. They had they had a lot of liquidity on the domestic market to do these deals overseas. And so I think the Chinese kind of they talk the good game, and I think all of them have the best intention. Most of these people, they don't wake up in the morning and want to do bad. These clubs, unfortunately, just kind of they have sometimes really bad people around them who are advising them, and then they get reckless. I think there's a clear case study of deal that happened. So I'm sure they came in with the right intentions, but once you've blown £200 million and you're still standing still, obviously getting relegated, and then you've got the regulator kind of trying to take you out of business, it's very hard to. It's very hard to manage expectations of the fans and everyone else, because you're done, right? So I think the Chinese, obviously, there has been a few success stories, but it's mostly been kind of bad. But the Chinese are off the market now. They're not going to come back in anytime soon. And I think China's golden age of football was very short. But as they say in China, everything is 100 years. And they always think, I think there was one politician who said, what do you think of the French Revolution? I think it was Deng Xiaoping. He said, too early to tell. Obviously, the French Revolution was a long time ago. So I think the Chinese, they see things very differently. I'll kind of leave it with the Chinese there. So I think the Americans, them coming in, I'd say most of the people coming in, like it's a similar thing. They have the best intentions. They come with a very different model. A lot of Americans are all about driving revenue, increasing the commercial gains on sponsorship deals and other aspects of the business. I think it's pretty hard because obviously the TV rights are usually kind of locked in at 2-3 year contracts and 5 year contracts, and there's really not much you can. I mean, obviously you can grow maybe 20% revenue per year, but there's certain caps, right? There's limitations, certain equilibrium of some of these clubs at a certain level, where obviously the Americans, some of the data guys who are coming in now, who are focused on the data, I think they're going to make the biggest impact in the football business. But I still think the Americans are so far ahead in sports. Like, I went to do to one of the offices of the New York Yankees a few years back, and I'm not joking, it was like a Wall Street trading floor. Like, these guys were there was like 50 Billy Beans working there, kind of working on the data. And for me, like seeing that in baseball and then you look at England, I've been in some big Premier League clubs' offices and I've never seen that kind of level of scrutiny on one specific player, how they play and stuff. So I think for me, the Americans come in with obviously the Americanization, trying to drive revenue, trying to build more value. The issue with the Americans is sometimes they like monopolies, they like kind of just consolidating markets, which I think is very hard to do in football as an asset class in Europe because fans don't want a Super League. Me personally, I also don't want it. I mean, it's good business for some of these guys, but I just think it kind of kills the business. It's just very bad PR. Why do it, right? So I think the Americans, most of them come in with best intentions. Some of them, I mean, I'm a Liverpool fan and might be very good ownership group, I think, for Liverpool. After a pretty dark ownership group before them. But even then, like there's 1% of the fan base which will let Fenway out, right? Fenway out. I mean, that's for me, it kind of blows my mind because they just won the Premiership, but you've still got a minority of the fans. So I think, just to summarise what I'm trying to say is, you're never going to accommodate all the fans. You're always going to get some haters, like with everything, right? But in football, you're always going to get some haters, and you can't please them. Even if you spend £1 billion on football, like on players, look at Man United as a recent example. Sir Jim Ratcliffe has invested hundreds of millions and probably will continue to invest hundreds of millions. There's very few Man United fans I know who have any good words to say about the guy. So yeah, it's a tough one. But I think the Americans have the best approach now in football. And unfortunately, the local billionaire in England, who's English, I just don't think they kind of have the same kind of focus on trying to drive the revenue. And I think the Americans, they just come with better expertise. If you're bringing expertise from the American basketball or kind of American soccer space, even that, or baseball, they're just very different models, but they just know how to sell better, I think, and they have different ideas. So it's maybe it's too early to tell, but I think a lot of the PE guys who entered football, for the American PE people, they have 5, 7, 8 year kind of terms. So I think when they start exiting or when they start trying to exit, you're going to see kind of more of a, did they make money? How much revenue did it go up? So I think a lot of the data is kind of, there's a lot of data points to watch right now.
Yeah. I mean, when you talk about the American focus on commercialization, I think it's very simple to say it derives from basically how the country has been founded. The founding fathers were very entrepreneurial to begin with, and obviously that's instilled in the doctrine of the basically the ethos of the country. So it comes from there, and obviously then you have that sort of like environment cultivated from any stage. And then that's what we're seeing with any sort of American coming into any industry outside of America. But focusing on the transactions in football, can you walk us through a typical football, let's say, sell? So you mentioned that you focus on the selling side. So what's that like? Well, how does the deal get closed? What's the beginning of the deal sense?
Well, it depends. Like, I generally try and bring up buyer. So there's a lot of people who I call them goal hangers in my space. So they'll get a sell side mandate, sometimes exclusive, but they don't actually have buyers and they're not actively bringing the money. They kind of they'll pretty much get an agreement and then they'll try and get other people to bring the money. But for me, I always have the money. So I'm always focusing on the buying side. I just position myself on the sell side. So I will get a sell side fee. It's mostly exclusive. I've done 6 deals in England now, so I can generally ask for exclusivity and it's granted. I don't get it for a year, but these things should not take a year to do anyway. For me, 2 months, 3 months is more exclusivity than I need, because that's more than enough time for me to get a buyer in position, in a data room, in exclusivity, and obviously then completing a transaction. But yeah, it's think of it as like, I don't know if you ever watched Hitch with Will Smith.
So I think, yeah.
Yeah, so I'm like a little bit like that. I've got to do the matchmaking, kind of trying to get an obese guy to marry a supermodel. Joking, but you understand. So I'm trying to sell something that sometimes doesn't look amazing on paper. But as I said, like a lot of these football clubs are insolvent, and there is a bit of a sales pitch from me. And obviously, you really got to display the potential. And obviously, a lot of these football clubs have huge potential. And was in the National League several years ago. It's now in the Championship. It's very close to the Premiership. That's a huge story, right? Huge potential. So Americans really like it. But I'd say that the overall process is finding a good high quality buyer, someone who has the best intentions to be a good custodian, who has money to invest, who Googles well, always a good thing. And then obviously like proof of funds, certain other things. If they're a pretty high profile person, they're already on Forbes rich list, probably don't need the proof of funds. But for me, my early stages is just to kind of get all these things warmed up, and then once the seller is happy with that, there'll be like a term sheet that'll be signed off on. There'll be probably a 30-day to 90-day exclusivity depending on the deal size. And then obviously it goes with the regulators, and then that's where both sides will have lawyers and sometimes I'll have like a external auditor. There's a few other kind of things that fit after that. But for instance, if it was in England, outside the Premiership, it would be the EFL, and then you'd have to submit known as the director's test. There's a lot of other things that go on there, but for me, I generally just leave that to the lawyers. I'm not giving legal or financial advice in my line of work. I'm interested in people, trying to think of me as like a human punch bag. So I get punched by both sides, and sometimes it's a long kind of process of getting punched on both sides, because it's always very difficult managing expectations with sometimes difficult people who have high expectations of what they're willing to buy for or sell for. Yeah, I mean that's one thing I'm good at: high stress tolerance and dealing with people who kind of need a bit of hand holding sometimes, because a lot of these guys, their football club is a very specific part of their kind of world, right? Like they might have a super successful business in plastics and mining, or kind of some other type of business where they make money and it runs like clockwork. But when it comes to football, it's then usually maybe they're from that town or they're from that city. It's a very personal investment, and obviously someone like me can gain very unique access, which sometimes I speak to owners more than they'll speak to their wives or their children, and it just kind of you just got to always try and keep them happy and obviously on board. And sometimes you have to kiss a few frogs, right? So some sellers, they'll sometimes have to speak to 3 or 4 buyers before they get the right person who fits. So yeah, the process it's really as complicated as you want it to be, but I just find try and keep it simple. These businesses are not too complicated. Maybe when they get to the Championship, they get a bit more complicated, but generally tier 3 down, they're pretty simple businesses. And it all depends on the buyer, right? If they really want to do a deal, then you really in theory you can complete a transaction in 1 or 2 months. For my experience, it's usually a 6-month thing, and there's a bit of a kind of a marriage making where they have to do meetings. Maybe the investor wants to go to a game, they want to kind of meet the manager. There's a lot of stuff that goes on, right? But it's all different. Every deal is tailored. So I don't know if that answered it. No, I kind of went around it a bit. There's a lot.
I mean, you gave a broad sort of like overview of what that looks like, and yeah, I think it does make sense. I mean, listening to it does make sense from my perspective. But so let's sort of like go further in terms of like, so for instance, we're focused on the EFL club. What potentially should investors be looking at in terms of like financial issues when due diligence takes place?
Well, are they insolvent? Most likely, yes. Now, how insolvent are they? Is it so? For instance, there's some football clubs that they have a separate company that owns the stadium. A lot of that was around the FFP issues over the last few years. So obviously, a lot of Americans, they get pitch deals, but they don't really kind of know how to profile it, because they don't know who actually owns the debt, how's that controlled, how's the interest paid on that, if it is charged. Sometimes these can be real monstrosities. Like the reason why Reading took so long is because of how it was structured. it was a semi-listed company. There was complications with who were the owners, who were the real owners, and there's a lot of clubs that kind of fit that kind of category. For me, I try to avoid the complicated ones. It's not because I don't fancy a challenge. It's just sometimes I just don't have enough bandwidth. Like I just don't have the time and day to just deal with so many problems. Because if it's a simple deal, then I've got a good chance of closing it. If it's a monstrosity and you deal with complicated people with crazy asks and kind of and it's all over, let's say it's a saga already. It's all over the press, and the fans are asking too many questions and kind of really causing problems for the ownership group and the regulators. I just try to avoid that. So I don't know if that answers it.
Yeah. So
Yeah,
you
it's
talking about regulators, let's sort of like go towards the sort of the owners and directors test. What's your exposure to that? How do you navigate that? How do you prepare specifically American investors for that stage of the process?
Yeah. So as I mentioned before, the lawyers generally handle that part of the business. It's not someone like me to kind of handle it. I'll be on the emails, but I'm not running that part of the process. But as a fan and as a business head, I think the regulator is doing a better job. I think the EFL, for instance, they've had a lot of bad owners, right? I won't name them, but there's been some pretty interesting, charming characters over the years, and obviously they've polished that owners and directors test multiple times to get it to where it is. So I think it's a hard job, right? Because they're pretty unique characters who buy these football clubs, and things change, right? Like there's like for instance with Reading recently, they no, they weren't fit and proper, and then they weren't fit and proper. So it's kind of things are always subjected to change, and obviously things happening on the other side of the world. So I think the people around it who are doing a bit more the investigative side now, I think they're pretty capable. And I think there'll be less bad ownership groups in the future just because the EFL are just going to make it so difficult for someone to come in who just doesn't have the funds or who doesn't have the right intentions. It's a bit different once you get out of the EFL. So the National League is a little bit different and less strict.
Yeah.
But I don't know, the EFL are quite unique. Like for instance, I did a deal in Ireland last year, the Republic of Ireland, and I got a thank you from the league on doing a deal. I've never had anything like that in England. It's always I'm just like cog in the wheel. These deals in the background, but like for me, like I'm selling the Premiership, I'm selling the English dream, right? And people like me are the people who are bringing these buyers in and trying to prop up the market, right? And trying to keep I wouldn't say the English monopoly in football, but trying to keep England further ahead of say Spain because there's a lot of ambitious and people who are very focused on selling Spain globally. For me, though I don't live in England anymore, I'm very much trying to sell the product because I think it's one of the best cultural kind of exports that the UK has these days. Despite all the politics and all the other stuff, the football's still good.
Yeah, you're definitely right about that. The football's still good and hopefully stays that way. Of the deals you've advised on over the years, and obviously you have like a very diverse and impactful career, which one would you say has taught you the most?
Well, I don't know. I guess obviously there's the clubs that I name on the website. They're like done deals or where I was contracted, as a sell side or buy side. And there's also a load of clubs that I try to do, like I try to do deals for. And especially when I went back to my China days, there was multiple 200 to 500 million pound offers that I made for football clubs, mostly buy side. And obviously they were rejected, or there was some conditions or conditionality that a buyer would never accept. So I think for me, I've learned more on the huge time commitments and the battle scars that I accumulated trying to do the deals from the other side. So for me, I think it's limited what you learn from a closed deal. I think it's more you kind of learn what not to do by deals that you tried to do in the past. Yeah, again, you learn from your mistakes, right, more than you learn from your successes. But I mean, I'm 33 now. I feel like I've aged 20 years when I should have only aged 10 in this business. No, it is what it is, right? Like all these things, I think compounds. I wouldn't say I'm an era of wisdom right now in my line of work, but every year I kind of get smarter and kind of less things to make mistakes on, and obviously and it really is sometimes by bringing, let's say if I work with an American billionaire and he's just a bit flaky, he kind of maybe wants to do a deal, maybe he doesn't, but I spend 3 years of my life working on that kind of deal, then sometimes You're doubling down, you're tripling down, and then in the end it doesn't result in a deal. For me, that's the most painful part of the business for people like me, because I don't get a $50,000 retainer or £50,000 retainer like some of the big investment banks, the boutique investment firms in my line of business. Because for me, I'm focused on the smaller type transactions. So yeah, I mean, you live and learn, right?
Yeah, definitely. You live and learn. You mentioned success and learning from success. In terms of success, how have these sort of I would say, quote unquote, smart or sophisticated investors been able to sort of like leverage their football assets into their outside business, into their main business that you've seen or potentially that has gone underreported?
Well, I mean, like especially a lot of the P guys who are in football, they're not really doing much. They're not bringing sponsorship deals. They're not really bringing in anything of value for their capital. So I think a lot of these guys, it looks good on the website, but there's not really a kind of a big anything big in terms of value that they add, especially on the financial side. So the big PE guys who are investment banks or funds, obviously they can provide liquidity, they can provide loans and stuff like that. Probably at lower rates than they'll get in the market. But I don't know. There's a lot of I mean, there's hundreds of American investors now in European football. So then there's many different investment groups. Like I'm working with Brazilians. I've worked with a Kazakh group recently. I've got a Kuwaiti client. There's a lot of different profiles of different people in this business. But I really think kind of football is not the driver for these businesses, unless they've got some sort of gaming business or they're in crypto or something else where they've got something that they want to show. I generally think most of these guys, they buy football as a separate business. And maybe like, obviously the sponsorship side of the business is a little bit different where they kind of, they want the profile, they're B2B or B2C. But I think for me, most of the guys I deal with, they didn't buy a football club for the marketing kind of exposure, maybe for the personal exposure, like Roman Abramovich. I'd say one of the key reasons why he brought Chelsea was because he would be super public, right? A bit less easier to kill. I might sound a bit crazy saying that, but I'm sure I've read a few pretty detailed articles where, they've alluded that was pretty much the case. And obviously, kind of moving money for the UK, owning a football club like Chelsea is pretty unique, right? And obviously the social capital around that ownership is pretty interesting. I don't know. I think it's too much of a question. There's just so much to cover on that.
Yeah. I mean, interesting take when it comes to Putin and Roman Abramovich, but we can keep that for later or different time, different pod. But yeah, in terms of debt in football, so the role of debt in football, and obviously I'm not trying to get information from you regarding this when it comes to your actual sort of like role of working on debt, raising debt in that sense, but more focused on just your perspective and understanding of it. So what would you say is the seasonality impact of cash flow when it comes to the lower leagues or the National League and the lower EFL clubs? When do the cash flows sort of like contract, or when is it less stable during the season or during the year, the calendar year?
Well, there's always different parts of it. Like for instance, right now, a lot of the clubs don't have income because there's no games, right? So there's certain parts of the season where clubs are more negatively affected. But it's always the clubs who don't have a super rich owner or don't have cash in the bank. Remember, like National League, League Two clubs, it's very hard for them to actually get any loans in the business. So as I keep on saying, like they're insolvent businesses, right? Like these clubs are not making money. Some of them don't have assets that you can secure kind of loans against. So if you're doing a collateral backed loan, but you've got a stadium and the car park's worth, let's say, £5 million. I mean, it's pretty hard to get a decent loan on the back of that. And they're not like mortgages, so the UK retail banks will they stray quite clear of football because of the last 20 years. There's been a lot of football problems. I relate back to the RBS with Liverpool. Them pulling that loan nearly bankrupted the club. So a lot of these banks don't want to touch football. So most football clubs rely on kind of boutique firms, Close Brothers, Macquarie Group. So obviously there's probably 20 plus that I could name. Most of these guys are more interested in the player receivables, so they're not collateral backed. So they don't take the training facility or the stadium as collateral, or even the shares as collateral. I've worked with MSD and a few of the US lenders, and they are more interested, or they are, let's say, more pro-risk. They will kind of take the collateral that was as part of the package of the deal. So there's a deal I did a few years back with West Brom. The Chinese ownership, they had a lot of problems. They couldn't get money out of China to pretty much bankroll the football club. And West Brom at the time, they didn't have any parachute payments left from the Premiership, so they were hemorrhaging cash. And I was pretty uniquely placed. I knew the only American group that would do that deal. I knew the Chinese well, what they needed and what they wanted. It was a 9-month headache to get the deal done, but in the end, I managed to get £20 million and then a further £7 million as an emergency loan to pretty much prop the club up, because in my view, like, that club probably would have gone into administration. That year it was a £39 million loss, but the stadium and the other assets were collateral. I know a lot of people like say bad things about the lenders, but if MSD hadn't done that deal, I assure you there would be hundreds of jobs gone, and that club, big historical club, one of the biggest clubs in Birmingham, former Premier League club, would have probably gone into administration. So for me, it's a super interesting market now. I think the lenders really get a bad name when really they're just doing they're solving problems. So obviously there's a certain cost. But I would say it's more they're the owners. They shouldn't take these kind of loans if they're paying 10 to 15% on the money. Like it's not good business, right? So I think it's more. If I was a football club owner, I would say well clear of debt. But obviously sometimes these clubs, they just don't have other options. So there's multiple clubs that, as I keep alluding to, they have burning cash, and sometimes even if their owner is a billionaire. Now, they might have a huge portfolio of stocks, bonds, and equities, but maybe they just can't get cash out from somewhere on the other side of the planet, bankroll football club in England or in some other market. So I think sometimes you just have liquidity issues. Obviously, it's always good to have a decent US lender who's willing to do it. And I say US lender because most of the US lenders, they are the key people in the market, right? UK banks. There's a few French banks and German banks, or small boutique lenders, but it's mostly a US lender environment right now.
And then with the potential for interest rates to potentially rise over the next few years, and I think I saw recently an article that stated basically that football, or essentially sports, are recession-proof industries. That's debatable. But because obviously consumer spending is not infinite. So my question to you basically is, how do clubs, especially in the lower leagues, navigate that conundrum where potentially interest rates will continue to go up, and these owners obviously are not fools, for lack of a better word. How are they able to basically mitigate that risk of obviously potentially putting the club in administration, obviously bankrupting themselves personally?
Well, most US lenders, for instance, they won't do a loan less than $10 million. So there's that. So obviously a lot of the lower tier clubs, they actually can't get a loan. There is Tifosi, there's a few other guys who are in the space who do bankroll the clubs. There's ways to do it. There's bonds as well in the market. So I don't think the market forces are going to be such a disruption in this business. You could argue that the UK is in recession already, and you could argue that the pandemic should have caused a lot more damage in football. I, for one, thought there's going to be a lot more clubs could go into administration, but it didn't, right? And there was actually there was not a lot of M&A activity. Obviously, there was probably more damage from the Russia thing, and obviously Russian owners happened to sell across Europe. Yeah, I really don't think the lower tier clubs are too affected by the debt markets or the interest rates in general, because I just think a lot of them can't actually get their loans. And obviously, most of the owners, they just bankroll it. They take the personal loans. If you look at most lower tier clubs in England and second and third secondary markets across Europe, it's mostly just the clubs are bankrolled by the owner, and the debts of the club are usually shareholder debts to that owners.
Yeah, saying hearing that from you, it sounds like a very unsustainable football pyramid. Let's see how long it lasts in terms of
Sure, but it's not a Ponzi. There's always a local billionaire or millionaire who wants to buy that football club, and there's multiple clubs. Like, for instance, West Brom. Now, I told you they lost £39 billion. Someone still acquired them. There was an American group that publicly spent £60 million doing that deal to take on the debt and everything else. So even though those financials would have made most people throw up, there was always someone else there to buy it, right? Or someone who can see the opportunity of it and who does have the cash to not rescue the club, but also to turn it around and to potentially get it promoted. So for you and me, it might look sometimes as a crazy proposition. I generally try and avoid the problematic clubs where it's a really hard sell. All the financials are just really ugly to look at. But there's always another millionaire or billionaire looking to come into the space. Remember that in the top 4 tiers of England, there's 92 football clubs. Over half of them probably are open to a sale right now, but only at a premium. There's probably only 10% of those clubs that actually really will trade this year, as in they're probably going to sell because they're at the right price or the right point range. So there's a lot of premium prices going around right now, and it's going to continue to get more. The valuations going to continue to go up, and it's kind of I'd say there's a queue of people trying to enter the market. So until there's kind of no queue, there's always going to be someone else who's going to buy that football club.
Yeah, I mean, sorry, just to say this point about valuations in sports, it's my personal opinion that in general, I think most sports entities or institutions are generally undervalued. If you look at it, if you use the Chinese lens, which is basically looking at things in a 100-year timescale, 50 years plus, generally they are undervalued because of the prevalence of technology. We're all forced to becoming digital. So like humans in that sense, and obviously things that allow you to have like in-person connections will always be in demand going forward, and that's where sports sits. And like you said, it's a very niche asset. But transitioning towards a potential situation where you have media, like I mentioned before, bashing a potential investor or buyer, and the fans also piling on. How does a deal in that sense go forward or not go forward? What is the what is the situation painted for us?
Well, firstly, I mean, if you have that 100-year outlook, there's a USL club owner who I spoke to on I think it's Tuesday this week. He had the opportunity to buy a women's team 6 years ago for $1, and now like he's kicking himself because it would be worth $100 million with not a lot of investment. Yeah, I think you're right. Like, no, there's a certain attention and influence that football has globally, even in the women's game and other aspects of it. So I wouldn't say we're early, but we're definitely in a bullish cycle right now. So you have the Chinese, you have Gulf investors, you have the Russians. So obviously you're in a wave of American capital. I mean, half the clubs in Premier League are owned, and let's say it's 33 or 34 in the top 5 tiers in England. Now, if that goes over half, it's interesting, right? But the question is, how are they all going to exit? Is it going to be more Americans coming in? Who's going to be the buyers going forward? Yeah, I don't know. It's a pretty interesting one. But there's certain parts of the business that I'm just not in. Like I'm just solely focused on the M&A, and occasionally I do a loan, for a problematic client.
Yeah, I mean, so focus on M&A sort of like sector, but focused around sort of the broadcasting rights. I mean, you do have to take into consideration the different revenue streams that come into play when you're looking at brokering a sell or buy deal. How does the broadcasting rights come into it in terms of like how it's going to change because of the economic situation? I don't know if you're following what's going on in Ligue 1, where obviously design is obviously they've had an agreement with Ligue 1, and Ligue 1 is going to go towards a DTC model. How does that come into play when you're brokering these deals, or does it not come into play at all?
Well, obviously England looks pretty safe right now. It's a good product, very good people at the top of these clubs, kind of shilling our product, to the rights and kind of TV companies. I think if I was looking at a deal in France, I'd be like pretty scared. I think most French football clubs are being told to pretty much take 50% of their revenue off next season, which is pretty terrifying for some of the bigger clubs who run pretty unstable heights already. My kind of key markets are Spain and England. So I just don't think it really kind of massively affects that business right now. And obviously some of these are 2, 3, 5-year contracts. So obviously it's forward planning. Despite Europe having problems financially and talk of war and obviously active wars, I don't know, I still think football is a pretty recession-proof business. And I just think there's a lot of attention, so the eyeballs are still there. And yeah, I've got no reason to kind of think that the market's going to implode anytime soon or take a big discount. I think what's happening in France is pretty much a French thing. But there's several smart investors I deal with, pretty high IQ, who think that there'll be chips across the board, especially in England and other markets. I'm yet to see it right now. And yeah, no, although the business is sometimes very stressful and a lot of headaches, I try and remain an optimist. Despite being in the trenches on these deals, I just think there's a lot of fans, a lot of people who want to watch these games. I think in the lower tier clubs, especially in England, so I watched the final of, watched an automatic promotion of a club in the National League South, my client, Truro City, and I couldn't actually watch it on the TV from afar. And I think for me, like, there's obviously a lot of opportunities where those kind of clubs, they have a relatively small fan base, but there's plenty of people, like, for instance, in Cornwall, there's 500,000 people in Cornwall, and probably more. There's a lot of Cornish people around the world, and they generally probably would want to watch that. You probably got 50,000 people watching it if you'd marketed it properly. So I think there's a lot of opportunities for the smaller clubs, to kind of on the TV side. But I think the bigger deals, I'm probably not the best person to give you the best analysis of it. I'm pretty hopeful that England will just keep doing what it's doing. I don't expect it to just constantly be a 8 to 10% growth per year. But obviously, if that does change, then the valuation model kind of changes in England. All I can say is I'd much rather watch Chelsea, Liverpool, Man United, the big clubs, than watching Bournemouth play. I wouldn't get too excited about that, but I'm not a Brentford fan. I'm not a fan of the smaller clubs, so I don't know what that looks like in the future. Again, go back to the Super League. A lot more people want watch bigger clubs, but the Premier League model is a success because of the way it's structured, right? So I think I'm not the right person to comment on it.
Okay, that's fair. So in terms of finding undervalued markets or leagues, where do you think a smart investor, if an investor was listening to this episode, looking for insights or strategy into a way to enter a specific investment, where do you think the potential undervalued investment could be in Europe, for instance, in terms of risk adjusted returns for football investors in general?
Obviously, no. Buy low, sell high. I'm joking. I really like the sixth tier of England right now. I like the third tier of Portugal, tier 3 in Spain, or Ireland, the Republic of Ireland, the tier 2 there. I like Northern Ireland. I've got a few deals there right now I'm working on. For me, I'm always looking for a 1 to 2 times revenue around that. I'm looking for clubs that aren't crazily run, as in they're not hemorrhaging 50% of the cash flow. I always focus on kind of business management easy to do business with, because there's a lot of people who don't actually want to sell. They say they need money, but then they actually don't want to do a deal. So I think for me, I'm good at finding the right seller. If they've got a reason for selling, they're much more easy to do business with. So for instance, let's say if some owner, he's got some health problems, well, I know he's a real seller because he's trying to put his house in order, or he's trying to lower his stress. That person's not going to mess me around. Someone who just brought in a year ago, who's just kind of trying to sell a minority, just kind of trying to use that money and gain me, and I just don't think this is good for an investor. So for me, I'm always looking for a decent seller, and I'm always looking for that 1 to 2 times revenue with good assets. And I find the undervalued ones are the ownership groups, who are more difficult to get to. Maybe they don't have WhatsApp, maybe they're not on emails, they're just fans, they've been involved in the club for 20 years, they just want the best of the club, but they're not openly selling it. I avoid the clubs that are in the market and have been for years. There's multiple clubs in the Championship, League 1, League 2 that I know have been in the market for at least 5 years, and I just avoid it because I'm one of 50 brokers who they spoke to, and that owner isn't really a real seller. They just want to they want to get a higher price, so they're kind of always gaming it in a certain way. So I'm always trying to find a low cost entry point. And for me, if I can get a client to buy a football club for £1 million, and let's say he brought that for 2 times revenue or 1 times revenue, but if that club can get promoted, say from the National League South to the National League, well, maybe that's a 4x because of the market. So I'm trying to avoid the Championship, where obviously there's potentially a 2 to 3x if you get into the Premiership, but also there's a huge risk of burning millions of pounds to get there and maybe never getting there. Whereas for me, the competition is much less in the lower tiers, and there's real kind of 3, 5x multiples that you can make in that space. I'm kind of always a bit cautious of going in with numbers with an American or an overbuyer, because if you're all about the numbers, sometimes you'll clash with a board, you'll clash with your fan base. I think probably you'll put things not the right priorities, or you'll say things sometimes a bit gold with the fans. But I really think if someone isn't looking to make a profit long term, I always kind of question kind of what their real intentions, because you should be trying to safeguard your investment, right? Trying to draw revenue, try and make your business better, so in the future, someone looks at it and it's only grown in value because you've increased the revenue and you've tried to keep it sustainable. You've upgraded the facilities, you've made a better product, and you've got promoted. And for me, I'm always looking for. I think it all comes down to the right intentions with the buyer and seller. I don't know if that answers fully your question, but that's another take.
No, it's a very in-depth answer, which I'm thankful for. But I think a question before we go to a sort of like a rapid fire session. So I have this question around the academy players, especially within the lower leagues and potentially national league. Um, what's your take when it comes to seeing them as undervalued assets and trying to basically underutilized asset, also trying to basically commercialize them? I mean, you just imagine if you're an American operator, and you have this underutilized assets in America, you wouldn't just leave it and say, hey, you know what, let's just focus on the first thing. What opportunities are investors or operators, football executives themselves leaving on the table by not looking for creative ways around the academy players?
Well, obviously, the budgets, the clubs are kind of sometimes stiff, right? So for instance, if you're a club in League Two, your TV rate is not going to jump too much, with the league. Either is your sponsorship potential. Maybe you can 20%, 50% increase potentially if you're really good at it. But the player side, if you can get a really good player, I mean, look at Jamie Vardy, clear example. Guy was playing like in non-league and then went to the Premiership and won the title with Leicester City by Fleetwood. So I think for me, if the American investor or any investor kind of looks at this with a sole focus on the player trading side, I think that's a very good place to start. Obviously, there's a lot of mistakes in that business, and there's a lot of quants who are very smart. They're Brighton, Hove and Albion, Brentford. They're very much quantitative and kind of driven, and obviously, they are successful for that reason. So a lot of people have tried to kind of imitate that or kind of similar systems, similar ways. I'm all for it, and obviously, football should be smarter, and the data should kind of help the clubs, improve efficiencies. But obviously, I've been on calls with owners when they've been trying to move a player in from Germany or something. Into England, but the guy doesn't speak English, maybe he doesn't want to move to England. There's other human factors that a lot of these guys miss. And obviously, sometimes they are quads, so sometimes they're a little bit socially difficult. They don't understand maybe that guy has a difficult family, the girlfriend who doesn't want to move, or the wife doesn't want to move. Maybe he I don't know, he's other reasons. It's just there's a lot of depth to this business. But I'm all for greater academies. More focus on the kind of B, C squads, under 19s, kind of really trying to get the talent. Because for me as a Liverpool fan, we just lost Alexander Jarvis. I don't think we have any scousers left in the squad. I've seen it through my 20 years of being a fan. Less and less people locally being in the squad. I get it. The Premier League is a certain product, so we have to have the best. Otherwise, you're gonna get relegated. We're gonna be playing in the Championship and then down on. I still think the focus, especially on all clubs all over the world, should be on homegrown talent. I do like the MCO space. I do like the idea of bringing players like Luis Diaz from a third tier club in Colombia all the way to England into the Premiership to win the title. Get it, love it. I know that whole story and not just success story. But no, it's you could have found Luis Diaz in Merseyside with that amount of investment. It's been plenty of talent that's just been wasted, right? Or they've gone to Preston, or they've gone to Fleetwood, or they've gone to second, third, fourth tier clubs because they just didn't have the opportunity. Liverpool couldn't risk it. So I think the data guys, I think some of them are great at what they do, but I think there's a human aspect to it. And I think some clubs, this is one thing I'd like from the regulator, I'd want them to more enforce more homegrown players, but not just in England, but like in Ireland and France and in other markets. I think it's great bringing the best people from all over the world to play. But I just think if you kind of eliminate the local kind of talent pool, then I think it's going to have, I think, repercussions in the future. And also, for instance, the fan base of where that town is, or that city, or or that area. Like if you don't have any players who are English, playing in that squad, then I just think over time that generational bond, the fans will be considered consumers. So there'll be I know I'm kind of going on, but there'll be like a point of the process where kind of this Americanization model kind of will break football a bit because it's just going to be a product to sell, and it's just going to be all about the money and not about where these clubs came from and their history, etc. Yeah, I could have gone on a bigger rant on that now, but probably
Yeah, I
probably
think
should.
I think that's a danger that we should be careful and be aware of. And obviously, the multi-club ownership model, the MCO that you mentioned, is also something that clubs use very well. But we can go into that in a future episode for sure. Let's transition into the rapid fire session. So I ask a quick question, and you give me your take on that. So yeah, you've just acquired a championship club. What three financial actions would you take immediately?
Well, I'm not saying this on the record, but I would get a grenade, a virtual grenade, and throw it in the boardroom. So I think you would eliminate most of the management team. I'm not saying everyone, but there's a lot of incompetent people running the football clubs. Also, a lot of amazing people, but no, unfortunately, there's football one of the only businesses where people are not held to account of results. No, it's a bizarre business. Premier League's getting much better, but the lower tier clubs, no, that I'm exposed to a lot. No, sometimes the management teams do not always have the best interests for the ownership, and sometimes they don't also have the best. I wouldn't say the best intention, but they're not doing the best job for the club. I think some of these guys are pretty lazy, but again, like, there is some really good ones. I think there's growing pains in that space. But if you were buying a championship club, I would, yeah, I mean, well, one, I'd be like trying to lock the guy up, in an office and say, hey, you got to fix certain things now because they're gonna grow from a little ulcer into a monstrosity, and you're gonna, then you're gonna have to chop your leg off. I think the key thing is getting a really good commercial director, really good CEO, very trusted people around you, someone who's going to talk reason and logical. Like, a lot of these CFOs, they are yes people. They are not gonna. They're not thinking about safeguarding the club. If you look at Derby County, for instance, a few years back, I think if more people had been, hand holding the owner and kind of, I think the club would have been in a far better place. So yeah, I think having trusted people around the owner sometimes who are willing to say things that kind of sometimes not are taboo. I would say that, and also get a good head of football, head of recruitment. That scouting part of the business is key crucial now. But yeah, no, I would just kind of. For me, if it was me, I would just be super cautious and a little bit like, I think it was a Roman, I think it was a senator or kind of a dictator. Anyway, he paid someone to always walk behind him to tell him he was human. I can't think the exact quote. I think someone to always be real with the owner, because sometimes the fans, they kind of, they're against the owner's head. They remember these owners, they're also humans, right? They read, they go on X, they go on social media, and then they're seeing all sorts of crap thrown at them, and obviously their decisions are scrutinized at every level, and kind of sometimes I would say to owners not to listen to your worst impulses to sack a manager or sack a player so easily, just because one small part of the minority of the fans kind of said that. So I think not trying to maintain the logic in the business sense, but also being handheld by people who have the best interests of the club, also focused on the sustainability. Because I just think if you just start throwing money out left, right, centre, I just think unless that guy's a billionaire and he really has that kind of cash, I just think you're going to end up with problems in the future, and that's why these clubs do end up in problems, because the owner kind of loses touch with reality, kind of loses touch with kind of the people around them, and then he just kind of starts getting a bit more reckless. And it's a little bit like gamblers, right? Sometimes they'll double down, they'll triple down, they'll quadruple down on roulette or baccarat, and it's very similar kind of thought process for a lot of these guys. I would, I personally never want to be involved post takeover. This is not my skill set. I'm not an operator. I don't want to be, unless Fenway give me a board seat, which is probably never going to happen. I just think there's people built for it. But I just think the owners, they have to be so careful. I know that wasn't fast, but there was a lot of that.
No, that was insightful still. So one unconventional social check that you sort of perform that other advisors don't when you're taking on a deal.
I don't exactly know what all my competition's doing. But I think for me, although I own a company and the company structure there is a very much a personal relationship for me. These deals are hard to do. So I think for me, I want to know who my client is, what's the children's names, what kind of problems they have in their life. And yeah, I'm on speed dial with a lot of these guys now on the WhatsApp, and sometimes I'll have a bad day in the office and I'll call me over to speak to their wife. So I think for me, always having that unique relationship where they know I'm a trusted person and I've got their back, and sometimes I'll take a call where they can just rant and rave about a bad day. I think having that unique relationship, obviously all advisors will say they've got that, but for me, I've got listed their birthdays, I've got listed that every deal, like the date I got paid. Now I always send a reminder every year to thank the client. I think a lot of advisors, they don't go into that kind of depth. It's more superficial and more transactional. But for me, it's it's a very personalized business.
It seems to me you're into the human to human relationships. But the final question would be, what club deal would you have said you wish you were involved in?
Well, obviously the biggest, right? Like now, sell Man United. I wish I'd sold Man United to a bad ownership group. I'm joking. I don't know. I tried to sell a minority stake in Liverpool years ago. I tried to sell a minority stake in Tottenham. There's a few big deals I tried to do and kind of just didn't work out. And then kind of buyer wasn't so serious enough, for the seller was a bit too difficult on price. So obviously, like any broker wants to do the biggest ever deal in the market, but for me, I'm good with. I've made my peace on that. I'm not trying to get these multi-billion-dollar deals anymore. For me, I want to just get really good buyers and do the 5, 10, 20, 25 million pound deal sizes. I have actually just closed the minority stake in a big club. We'll go should be public probably the time you go live with this. But again, like I don't want to go for the huge deals just because a lot of competition. I'd rather go for the smaller ones and kind of be doing 3 to 5 deals every year for the next 20 years. For me, like that'd be a far funner business for me than doing the odd huge one and then not doing anything for a few years. And also remember the big ones, it's a lot more complicated, right? Huge risk. There's less people who can buy Chelsea than there is buying a football club in League One or League Two England.
Yeah, no, that's fair. And then, yeah, I think that wraps it up. Thank you so much, Alexander, for your very deep
Thanks for the time.
insights.
No, I'm enjoying your podcast, and that's happy to introduce you to other people. And yeah, like
Perfect. And yeah, that's a wrap. Thank you again to Alexander for giving us such a compelling deep dive into the world of football finance and the deals that drive the game behind the scenes. And yeah, thank you so much, listener and the viewer, for watching this and listening to this. Don't forget to subscribe and stay tuned for more conversations like this at the intersection of football and business. The next time, take care.